Good morning, dear students and friends. Welcome to the Prithviraj English Academy. As you know that we are doing the Social Studies series for Karnataka State Boards, SST part number 2. In this video, this is the new syllabus of 2024 and 25. In this video, I am going to discussing the question answers of 10th standard, chapter number 31st, Public Finance and Budget. So without a delay, let's start the question answers of public finance and budget. Exercises. First main, fill in the blanks. In that first, fill in the blank. The government manages the public finance through the dash. Answer is fiscal policy. Fiscal revenue. Fiscal policy, you can take it down, then move to the next. In the budget, when the government's revenue is more than its expenditure, is called dash. Answer is surplus budget. Surplus budget. Now move to the next. The person who presents the central government budget in the Lok Sabha is dash. So my dear students, I am requesting you that along with this listening the question answers, just comment the fill in the blanks if you know the answers before me. Okay. So now move to the answer. Finance Minister. Answer is Finance Minister. Now move to the next. Fourth. The revenue generated by the government through the internal and external loans is dash. Answer is capital revenue. Then move to the fifth one. GST stands for dash. Answer is goods and service tax. G means goods and S means S stands for service and T stands for tax. Then move to the second main. Answer the following in one sentence each. So what is the public finance? So answer is public finance means the finances of the government. It gives a complete picture of the government's income, expenditure and the we are going to call it a debt management. Now move to the next. What do you mean by budget? The statement of estimated income and expenditure of a year prepared by the government is called the budget. Now move to the next. Give the meaning of the deficit budget. Deficit budget means what? Okay. If the expenditure is more than the income, it's called the deficit budget. Now move to the next. What are direct taxes? When the tax is paid by an individual on whom it is imposed, it's called the direct tax. Now come to the next. Express the fiscal deficit in the form of formula. So answer is fiscal deficit is equal to revenue receipt plus non-debt capital receipt minus total expenditure. Now come to the next. Third main. Answer the following in 5 to 6 sentences each. F points. Explain the difference between personal finance and the public finance. So answer is first will become to known as differences between private and public finances are private finance and public finance. So first I am going to read the private finance. Personal or private finance relates income and expenditure of one person or one family. At the same time, public finance means public finance relates to the income and expenditure of the government. Public means government only. Okay, then second difference in private and public is in private finance, individuals calculate their income beforehand and then spend it accordingly. So in public finance, the government calculates its expenditure first and then adjusts its income accordingly. Then third differentiation, personal finance transactions are kept confidential, but public financial matters are discussed in the legislative houses. When an individual or a family saves money, it will be supplement their prosperity. When the government saves money, growth is stunted. Hence, government always try to show more expenditure on developmental work. Now move to the 12th. Explain briefly the significance or importance of public finance. Significance means importance. The government manages public finance according to the fiscal policy. Public finance is managed keeping in mind the progress of the nation. The government through its fiscal policies formulates methods to the equitably distributes the country's natural wealth, labor and capital investment, and tries to maximize the production. Nation's progress can be achieved by achieving the welfare of the people. Then fifth one, the government tries to ensure the equitable distribution of the income generated amid all the sections of the people, and tries to see that all people live comfortably. The government policies enhances the public expenditure in priority areas like agriculture, small scale industries and basic infrastructure. The government takes steps to ensure a balanced growth in all spheres of the income. Developing countries like India utilize public finance in order to eradicate poverty and unemployment, to regulate financial upheavals and commodity prices. To establish financial stability, government use financial policy as a weapon. Then move to the 13. List the planned expenditure of the central government. So answer is, planned expenditure central governments are, first is financial services, agriculture and agriculture related activities, industry, communication, fuel, science and technology, rural development, etc. will becomes in a financial service. Then social services like education, health, hygiene, family welfare, drinking water supply, housing, social welfare, etc. will becomes in that. Then third one is general services. The expenditure incurred on maintenance of peace, law and order. Then move to the 14th. Explain the aspects of the non-tax revenue of the central government. So answer is, non-tax revenues are, apart from taxes, the government generates revenue from other sources is called the non-tax revenue. Main types of the non-tax revenue are the net profit earned by the Reserve Bank of India, the net profit generated by the Indian Railways, the revenue generated by the departments of the post and telecommunications, the revenue generated by the public sector industries, the revenue generated by the coins and mints, various types of fees and penalties, etc. will becomes. Then come to the, what is fiscal deficit? Mention the 4 kinds of fiscal deficit. Fiscal deficit means if the government's expenditure is more than its revenue receipts and non-debt capital receipts is called the fiscal deficit. The 4 kinds of the deficits are budget deficits, revenue deficits, fiscal deficits and primary deficits. So my dear friends, by this one and students, by this one we have completed the question answers of this lesson. So thanks for watching this video my dears. If you have any doubt, any suggestion, then please comment and like and subscribe my channel and press the bell icon to get more updates from my side. So once again I say thanks for watching this video. Jai Hind, Jai Karnataka.